Well, the jobs report was pretty disappointing this morning. We only produced 96,000 jobs. They expected 120,000, and 120,000 is not nearly enough. We need 250, 350, 250,000, 350,000 month after month to put people back to work. And then they give us the statistic that unemployment dropped from 8.3% to 8.1%. Well, those numbers are so misleading. Why did it drop? Because a lot of people dropped out of the labor force, at least the labor force that the government counts. Because you really don't drop out of the labor force. You're still looking for work, or you're trying to find work, or you got to be working, doing something. You got to earn income. You just don't drop off the face of the earth. They just drop off on the way they count. So it was a pretty dismal job report because not only was the August number bad at 96,000 when they expected 120, they revised downward the previous 2 months. It really is not very good. Not very good job production. Now, other statistics this week, most of it was okay to weak. It wasn't anything that was good. The new construction report was down 9%. That was bad. Car sales were up big. Okay, so car sales seem to be chugging along pretty good. Second quarter productivity was better than expected, 2.2%. They expected 1.9%. Productivity is the thing that really saves us because that means each worker is making more products without increasing costs and drives down the cost of labor. And when we compete with other foreign countries with bringing manufactured jobs back to us, that really helps a lot. So that was a good report. Now, if you remember right, a couple of days ago, the ADP report, which is the private company ADP who gauges how much jobs are being produced, came in at $201,000, which is a lot. 201,000 jobs, which is a lot more than they expected. But the official report this morning, wrong. So that was interesting. And unemployment claims came in at 365,000, which wasn't a bad number. But there's a PMI and other manufacturing data around the world was weaker. China fell further below 50%. That 50% mark is expansion. Anything above is expansion. Below 50% is contraction. And China has fell again about a couple percentage, not percentage points, but a couple of tenths of percentage points. They're like at 48, 49, meaning that the economy is still not taking off. What does this jobs report do this morning? Well, it certainly puts QE3 back on the table. And everybody was thinking it might be off the table because the economic numbers were starting to improve a little bit. So, and the Fed meets next week, or is it the week after? I think the 13th or something like that. So that's certainly back on the table because they don't have to, the Fed has two mandates. One to fight inflation, the other to create jobs or a stable economy. And they don't have to worry about inflation. But will the QE3 really do that much good? It's more psychological than anything else. The other big gorilla in the room is Europe. Yesterday, Draghi, the ECB president, came out with his plan or signaled his plan that they will buy unlimited bonds. I'm not sure if they could do that, but this is what he's saying, and that gave the market a really big boost yesterday, up a couple hundred points. Today, we're not going to have that kind of market. It might be okay, but it might be kind of flat up. Could be down because of the jobs report. I think people are looking at the jobs report and say, hey, QE3 is back on the table, and that's why the market might do okay today. But back to Europe, Germany is Supreme Court. Their version of our Supreme Court is going to make a decision based on whether or not Germany can lend the kind of money that the politicians want to lend. The German Bundesbank says no, we shouldn't be doing that. The German politicians say yes, we should, to try to bail out Greece and everybody else. And the Supreme Court is going to make a decision whether they can or cannot do it. Even if they agree that the politicians have the power to do that, which they probably will, not be my guess, there may be a lot of strings attached to that, which makes it more difficult in Europe. And the Europe economy is falling still. It hasn't stabilized. It's still falling. So it's going to be a volatile September, pretty volatile September.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.